Welcome back everyone to the Money Control live stream. You're watching another edition of Markets with Santo and CJ. Well, a very volatile day in hand for the benchmark indices, led by some negative cues that are emerging from the Asian and the European markets throughout the day. But if you look at the Nifty and Sensex, they've actually managed to, finally it looks like we're going to end the session in the green territory, probably for the 5th consecutive day now. Small caps clearly are the biggest winners of today. They have been outperforming the large cap pack throughout the session. But the concerning part is that the volatility index did see a very sharp jump. It was higher by almost 3 to 4% and is now above the level of 18 points. So clearly, Santo, some short positions are also being built up in this market.
No, it's pretty interesting. In the past we have not seen this kind of a trend where the market keeps rising and yet the volatility index seems to be keeping pace. And looking at the way the market has rebounded today, CJ, it makes me wonder if the last bear has finally thrown in his towel.
Possibly, yeah.
It's time for the market to reverse.
Exactly, because if you look at the, global cues, nothing has changed since the afternoon, because Dow futures are also down.
Exactly.
Nasdaq futures are also down.
Typically, when Dow futures are down, you see the market reacting, but here it seems to be exactly the reverse. So sentiment remains pretty upbeat even now, going purely by the way the market has been playing out today. And at the macro level, again, India seems much better placed. That could be one of the factors which is giving confidence to bull at this point. But if the globally equity markets don't do well, it's very hard to see how India can kind of be a oasis of calm.
Yeah, that is true. Of course, I think another factor has been, of course, the earnings season so far has not panned out to the worst of fears that investors had. Clearly, although there has been pain on the margin front, but net profit or downgrade so far has not happened. If you look at Motilal Oswal Financial Research, they just came out with a mid-quarter review and they have suggested that Nifty downgrades are barely 0.5 to 1%, Santo. So clearly goes to show that the fear on the earnings recession that was there clearly has not materialized.
Or is it that the analysts are being too overconfident in the company's ability to deliver? But that said, it's going to be a very stock-specific market at least for the next few months. It looks difficult at this point that you'll see the same kind of uptrend that you've been seeing till.
That said, talking of stocks, a lot of stocks that were in action today and the 5 picks that we have, Santo.
Well, starting with Escorts, CJ, as they say, when facts change, it's time to change the opinion. So Escorts as a stock I'd been bullish on for a very long time. And but the first quarter numbers has come as quite a bit of a disappointment. A sharp margin compression as well. And what analysts have highlighted also is that typically when you give up margins, it's an attempt to kind of gain market share. But if you have both low margins as well as loss in market share, it means that the situation is pretty grim. The company was on our channel CNBC TV 18 today, and it sounded very, very optimistic, but the market doesn't seem to be believing that, as can be seen from the fact that Escorts is among the top losers in the mid-cap space today. Brokerage house CLSA has cut its price target and earnings estimate for the stock very sharply. It's also downgraded its rating on the stock from buy to sell and now has a price target of 1,632 rupees. Earlier the target was 2,069 rupees. So quite a sharp cut, and also in terms of the EPS estimates, it has reduced EPS estimates between now and FY24 by close to about 24%, citing lower volume forecast.
Well, Santo, I think I had when you were bullish on it, I had been warning you about this.
I knew you would say that.
This situation for quite a long time, because of course the signs were there when the monthly data was coming in that volumes were not picking up for Escorts, and clearly the price hikes that the company had taken have not gone down well with the entry-level consumers at least. But that said, I think from the management's commentary, I think there were a few things to take note of. Clearly, the margin pressure, of course, was the main highlight of this quarter. That is something that probably has already peaked. I mean, we know across the board that we have seen commodity prices come off, steel prices come off. So clearly, you could expect margin improvement to happen going ahead. And the management also indicated that they expect the normalization of margins to happen by the 4th quarter of FY23. So clearly some positive there. And I think the only caveat here with respect to the market share loss is the fact that festive demand is something that the company would be banking on. They would be expecting that hopefully once we reach towards the end of September and we enter the festive period, you could see a revival in tractor volumes going ahead. So I think those are the two mitigating factors for me, given the fact that the stock has already taken a decent amount of beating. This year is down about 15% so far on a year-to-date basis. So clearly, if you're trying to play a contra play, maybe the margin recovery and a possible upswing in volumes towards the festive period could be the only two things to look out for. That said, one stock, I beg your pardon, one stock that's really been buzzing in trade today is Sterlite Technology. Well, we had the 5G spectrum auction conclude yesterday, and in my opinion, I think probably one stock, which of course is not the traditional telecom operator, but one stock that will benefit from the 5G, capex that is going to come in the telecom sector is Sterlite Technology. The company had been talking about it for the past year, the fact that they have developed a lot of suites of products and solutions for 5G telecom operators, and I think with now the auction concluded Santo and these companies looking to do the capex work, laying the groundwork for the network to come alive probably later this year or by next year. I think Sterlite is in a very, very good position to benefit from this from a monetary point of view, and I think you could see that bump in earnings as well in FY24 onwards that Sterlite could get from the 5G auctions.
Well, this stock used to be the star performer some years back. It had a golden run between 2014 and 2019, 2018 rather to be precise.
Again, a period of heavy telecom capex led by RG, of course.
Exactly. So at that time, you had seen the stock rise close to about more than fourfold or fivefold, the big run up. And then it came off quite sharply, and since then it's never managed to report the same kind of numbers. During that period between 2014 to 2019, you saw the top line more than double, and that's also reflected in its bottom line as well.
Absolutely.
After that, the top line has remained steady, but its bottom line has been consistently under pressure for some time now. The profitability just doesn't seem to be coming there, and which is what seems to have most investors slightly skeptical about the stock. The stock has already halved from its peak of about 298, 300 rupees. It's quoting at almost 50%. It's half of that. And while the company has been talking about the solutions that it is providing for 5G players, the market seems to be very slow to take notice. At least judging by the stock reaction, I would say that the market seems to be saying, first let me see it in your at least quarterly numbers, at least for a couple of quarters before I really start to reward you.
But I think, Santo, the 50% correction also, in a way, it doesn't mean that you are entering the stock probably at a very, very expensive valuation, buying into a narrative, right? Even if you were to buy into a narrative right now, I don't think the risk reward for you is against you, because the stock has already taken quite a beating over the past 6 to 7 months. So clearly, it's one stock to look out for. Basically, given the next 2 years are going to be dominated by the capex in 5G space, so it will be something to look out for me.
Well, next stock, Ashok Leyland. Again, the first quarter numbers fell short of market expectations, particularly on the margin front. Now, the overall outlook on the commercial vehicle industry is quite positive at this point in time, and you saw that in the numbers of Tata Motors as well. Even the company has sounded quite positive. It has said that this year is going to be a great year for the commercial vehicle segment in general. It sees very strong demand for tippers and multi-axle trucks. But that said, the market seems a little cautious at this point in time. It's always been a little slow to reward Ashok Leyland. If you look at the way the stock has performed, no quick jumps there. It's been a very, very gradual process there. But at this point in time, it does seem that market seems very bearish on this stock. According to brokerage house Macquarie, the CV upcycle may have already been priced in, and the margin is a big disappointment, although there could be some slight improvement there because of falling raw material prices. But other than that, it doesn't look like a great story. Macquarie has a neutral call on the stock and a price target of 150 rupees.
So, Santo, I think that for me at this point of time, Ashok Leyland, of course, the stock has already done quite well in the past 2 to 3 months. Ever since that, the wave of buying entered the auto space, we have seen CV stories in particular, such as Ashok Leyland and Tata Motors, do quite well. But for me, I think the margins was the only question mark, and we have seen that the company has suffered on the margin front in Q1. But going ahead with the margin recovery likely to happen with raw material prices coming down, growth plus a recovering margin makes Ashok Leyland quite a decent story for me, in my opinion. I mean, the growth that we have seen in MHCV or the medium to heavy commercial vehicle space, that is likely to continue. ICICI Securities is expecting almost a 36% annualized growth over the next 2 years in that segment alone. Apart from that, you have the bus segment with the schools reopening and new bus orders, being given out. That is another lever to grow, volume growth that can come in for Ashok Leyland this year. And the third point for me is the fact that Ashok Leyland is also trying to get into the electric vehicle space. Now, compared to passenger vehicles, I think probably one space where electric vehicle demand could really pick up going ahead is the CV space, because there the economics make a lot of sense for fleet operators out there. And I think Ashok Leyland is already in talks with a lot of international investors to probably sell part of his stake in Switch Mobility, which is his EV arm, in order to develop a lot of these, EV CVs. And when that happens, I think a lot of value could be unlocked in the company, and that could be another, a catalyst for re-rating for the stock going ahead. Well, next stock on my list is Hero MotoCorp. Of course, I'm bearish on this stock. I have been bearish on this stock for quite some time. And I think the reasons are pretty clear with the July auto sales numbers that have come out. I mean, the company has seen almost a 2% year-on-year decline in volumes. Now, this is against July of last year, which anyway was not a great, month for the company, given the fact that we were still getting out of the second wave of the pandemic. To underperform on such a low base just goes to show that demand out there is very, very fragile. I mean, I told you earlier as well, excuse me, that a two-wheeler volume recovery story, I think it's too fragile to be believed at this point of time. You have to wait it out till September, October and see whether it still continues. And I think clearly that is bearing out at this point of time. Something that stood out to me, Santo, is the fact that retail sales, according to analysts, retail sales in two-wheeler segment is now at the lowest point in 2015, since 2015. It's the lowest since 2015. So basically what is happening is that wholesale sales are rising, largely because people are filling inventories at this point of time in the hope that festive demand will come in. But retail sales are not picking up, and I think that is a very bad sign. And so overall, I think with respect to two-wheeler and Hero MotoCorp specifically, I think investors should take all of this narrative around volumes recovery with a pinch of salt.
But CJ, it's a very strange thing. You're betting on a festive season recovery for tractors, kind of thing, and not so much for two-wheelers. Why?
Because you look at it, tractor is something that brings income to the farmer, right? A two-wheeler will not bring an income. Two-wheeler is a discretionary spend for a farmer, right? Even if you just talk about the rural area, two-wheeler would be a discretionary spend for a farmer. A tractor is actually part of his business.
But mobility is also important, isn't it?
It is important, but I mean, compared to a tractor, given a choice, given the inflationary environment, given the choice between a tractor or a two-wheeler, probably a farmer would want to invest in a tractor than to purchase a two-wheeler. So that is the only, I mean, hopefully two-wheeler demand also recovers. We would of course want to see all of the entire auto sector do well. But clearly at this point of time, the signs are better for tractor makers, because you're seeing that in the case of M&M than say a two-wheeler.
Well, CJ, if you look at how the stock has done at this point in time, I take your points that the situation is not looking very good for two-wheelers at this point in time. But at the same time, the market somehow seems to be betting that the worst may be over. That could partly explain why the stock, after taking a knock, over the last one and a half months, still has managed to rise about 10%. Yeah. For the year so far, it's up about 10%. Not very huge. Other auto companies have done
underperforming Bajaj Auto.
Yeah, the others may have done better, but probably the worst now may be behind. So two things could change. Again, one is that we still don't know at this point in time whether the festive season will spell good news. My bet is that probably it would. The worst, that's what the market is also expecting, I would say. Second is anyway some relief on the margin front from the easing commodity prices, which applies for automobile stocks across the board. So I would bet that probably a Hero Honda, the worst may be over at this point in time.
Yeah, I think margin is the, of course, one positive that could work in Hero's favor, because of course probably compared to Bajaj Auto, I think Hero has suffered the most in the two-wheeler space when it comes to margin, such as, I mean, you could take an equivalent example in Maruti Suzuki in PVs. They have suffered more probably compared to Tata Motors in terms of margins. So clearly, I think margin tailwind could be there. But I think, of course, what people are looking for is growth and volume recovery and market share recovery for Hero MotoCorp. And I'm just a little skeptical whether that could take a little bit more time than what the prices are factoring in at this point of time.
The last stock on our watch list this afternoon is Chalet Hotels. Strong numbers, strong set of first quarter numbers there. Yes, and partly expected also. Overall, hotel occupancy, room occupancy rates for hotels have been an upswing since the beginning of this calendar. In the case of Chalet Hotels, the first quarter revenues as well as operating profits were at record highs. Very strong numbers indeed there. Plus, the management has said that its occupancy rates also have been steadily going up, and it's now exceeded 7,000 rupees per room. Now, what works in favor of this company is that it caters predominantly to the business segment, and 2/3 of its business comes from the corporate sector. And now that we are seeing the reopening of the economy and pickup in business travel, Chalet Hotels is doing pretty well. So, company is very much optimistic, and even the market seems to be that way, as seen from the fact that the stock price has been very steady over the last 3 months.
It's kind of funny you talk about the recovery in business travel, because if you remember, not so long ago we were talking about VIP industries, and I had mentioned that VIP actually in its investor presentation had mentioned that the recovery in business travel has actually been quite slow compared to other segments of the travel industry. So yeah, a very interesting point that there are different sort of commentary coming in on business travel, which of course is a very important segment for the entire hotel industry, and more so probably for Chalet Hotels. But I think overall, if you look at the hotel industry, I think Chalet and Lemon at this point of time probably would be a better bet than Indian Hotels in my point of view, clearly because of the the momentum that they are showing is much better and much faster than you're seeing at Indian Hotels at this point of time.
Well, so what do we have on the radar, CJ?
Santo, not much actually, not much on the economic front clearly, but on the earnings front, we don't have too many nifty earnings, but we have Interglobe coming out with their Q1 numbers, so that will be a big number to track from the aviation industry. We have Vodafone Idea also coming out with their June quarter earnings, as well as Adani Power from the power sector. So these will be 3 major earnings to keep an eye on.
Well, with that, it's a wrap on this edition of Market with Santo and CJ.
I think, Santo, before you want to catch your tea, I think we should join our colleague Nisha Poddar, who has an update for us on Yes Bank. Remember, yesterday we had talked about the entire capital infusion that Advent and Carlyle are going to do in Yes Bank, and now we have Nisha Poddar with another update on that exclusive.
That's right. After the large transaction of capital infusion being announced in Yes Bank, $1.1 billion for 20% stake, 10% each by Carlyle as well as Advent, the next important step is going to be the board position and the nomination by these 2 investors who have a significant minority stake now being bought in Yes Bank. This is part of the transaction that the investors had sought because the bank is at a critical stage. Now, the sources with direct knowledge have shared with us that from the side of Carlyle, it could be Sunil Kaul, who is the lead of financial services sector for Carlyle Asia, who led the transaction, sits out of Singapore, is the one who could be nominated on behalf of Carlyle to sit on the board of Yes Bank. And from Advent side, the India head, the managing director, Advent International, Shweta Jalan, who led the transaction from Advent side, is the likely candidate and nominee from Advent side to sit on the board of Yes Bank. So these 2 names, Sunil Kaul as well as Shweta Jalan, is what we are picking up, contrary to several news reports who are otherwise naming some of the advisors to this private equity firms. Remember, to set the stage for this nomination of investors on the board, articles of association was changed by the bank in order to incorporate and induct the investors on the board of Yes Bank as well. So the stage is set. RBI approval is going to be the key. We reached out to all the 3 participants but did not get an official comment on this particular development.
Well, there you have it, Santo. Exciting times to be in Yes Bank, I believe.
Yeah, and it's broken out of the 16 rupee range, which it had not in a very long time.
Absolutely.
So many traders are betting on the stock.
I would not be surprised if it goes towards maybe double digit into 20s possibly. It is very likely if once the price momentum picks up, it's very difficult to slow it down. So let's see. I mean, very exciting times for a lot of investors, especially retail investors who have held on to Yes Bank for a very, very long time and maybe just getting rewarded now.
Well, thank you for watching, and do share your feedback on the show in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. For rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live tomorrow at 9 a.m.